Hey everybody, how we doing out there? Doc Severson with you guys here today. Ready Set Crypto doing what we call a Ready Set Live. So today I'm going to be talking about this concept of chart like a pro, four powerful rules for crypto trading. Want to make sure before I get started here that you guys can all hear me, you can see everything looks good from your end. Like to know where you guys are coming in from today, and are you getting the same polar vortex that everybody else is here in the United States? I know that you guys from down under are going through your summer right now, so bring it on, man. I'm ready for that right now. All right, so I'm going to hold on for a second here before I get started. And then what I'm going to do is I'm going to switch out to Big Chart, Little Doc, and make sure that you guys can see what I'm presenting here. Okay, so I'm seeing all good. We can hear me fine. That's good. All right, let's get on with it then. Big Chart, Little Doc, away we go. Let's find out how to chart like a pro. So before we get started here, guys, I want to make sure that you, I'm not going to read through all of this. I just want you guys to know that you got to be serious about this. You got to treat this like you are a professional. So don't play with this as if it's a hobby, because it's going to be the most expensive hobby that you can possibly imagine. So I'd like to welcome also our premium members, those of you that are out there today. And I'd like to welcome you aboard tonight. Today, my goal is to share some guidance on how to secure maximum accuracy with your charting. And I will talk about four powerful rules. And I'm not kidding about these things. If you guys pay attention to this, this is stuff that will stick with you for the rest of your trading career. It's that simple. You'll understand exactly what I'm talking about tonight, and you'll be able to apply this. I think it will change how you look at charts and simplify your approach. So I'll go for about 45 minutes. That's typically how long it takes. And what I will ask is that you hold your questions and you hold your ripple pumping until we get to the 45-minute point. Okay, so let's just hold off on that, because if I see stuff going off in the chat room, I'm just going to let it go. So I'm not going to talk about, don't ask questions about portfolio, otherwise the SEC is going to come knocking at the door, haul me off to the pokey. So today we're going to be talking about charting, price analysis. That's what we're going to be talking about. There's no one way to do this. I know that there's lots of people that are out there that already have your own way of doing it. That's great. I don't want to argue with that or say that what you're doing is not appropriate right now. I just want to show you guys what I'm doing, and maybe this might be a solution for you guys. All right? How we doing? All right. Boom, boom, boom. Who is this guy? Who is this bald creature in front of you talking away in the microphone? Again, I'm a husband, father of three, student pilot. I'm that guy that quit his job 13 years ago. It was actually yesterday, 13 years ago yesterday, handed in my notice, walked out of my corporate job, never have looked back. I never want to go through that again. All we did was just sit there and fight on conference calls all day long. And they paid me for what? I mean, it was just, there was zero job satisfaction. It had gotten to be a very stale industry by that time. So what do? I trade options, I trade futures, I do technical analysis, I trade crypto. I'm involved in neuro-linguistic programming. That's what that NLP is. As well, you should be too, because this will affect your results. And so I've been doing this for about 22 years, and I like to think that I do it slightly differently than other people do. And also because of this, what I found was that the biggest limitation most people have is upstairs, is their mindset, and understanding that the mindset is required to be effective traders. And so that's why I wrote Hacking the Holy Grail, which is available on Amazon. All right. Yeah, I am half of Ready Set Crypto. I'm the other half of this. I'm the trader half. You guys have heard the guy with the big deep voice. He's the brain on blockchain dude. That's Mav. I'm the other half of Ready Set Crypto. I'm Doc. So what is the problem that we are trying to solve today? What is the problem that we're trying to solve today? We are trying to get accurate charting and trade analysis. We don't want that divining rod. We don't want to move our hands up to the screen and try to feel what's going on. We want objective chart analysis. What I found is it's in pretty short supply these days. And what I say is that an ounce of opinion outweighs a pound of facts, especially if you're in Twitter, right? So we'd all like to know where our favorite crypto is trending to and when would be a good time to get into it, right? We'd all like to know that. So how are most doing their analysis today? So everybody starts in the same manner. I'm going to go through this quickly because I don't want you to remind you of the bad habits that we all do, but everybody does the same thing, guys. For those of you that are just joining me here, again, my name is Doc. I'm with Ready Set Crypto. We're going to be going over the 4 powerful rules of charting today. We'll get through this in about the next 40 minutes or so, and then I'll take your questions after that. So humans are herd animals. We do feel safety in a crowd. I mean, you guys have all been there before. You've been to some type of football match, football game, whatever you want to call it, whatever sport it is. There's nothing that's more fun than sitting with 80,000 of your closest friends cheering for your team. It's a riot. But if you trade like this, you will absolutely get your clock cleaned. And this is something I don't want to see you guys do. So we feel strength in numbers, but crowdsourcing our trading ideas is a bad idea. What happens is we hear people yelling about something. There'll probably be people in today's chat room yelling about a certain investment or coin. And let them go ahead and do that, but don't feel influenced to buy because of that. But we do feel compelled to join when people yell about something and are emphatic about it. So with social media and the internet, there's no shortage of sources battling for your attention. First, there's Twitter. Where do I begin? Crypto Twitter is awesome, right? All these people screaming out for your attention, it can be impossible to ignore, but you have to watch what you're doing, right? So you'll see guys like this out there. Crypto Pump Signal retweeted something here. He invested $10,000 into a certain coin, made $15,000 in 10 days. You look at something like that and you're like, wow, well, that's pretty cool. I wish I could do that, right? Or here's a pump announcement. I can't stand these. Hey, meet at this place and we're going to tell you what coin that we're going to pump. Guess what? They've already bought into it and they're going to fade you if you join up. So if you're new to investing or crypto in general, it can be very difficult to ignore these posts with their promises of, yeah, BitConnect, there we go. Yeah, we're going to set up a pool to see how long it would take somebody to say BitConnect. So there's a reason why these guys are telling you about their wins and not their losses. They need you because you're just a pawn in the game, right? You know how this works out, right? Something like this. All of a sudden, Ripple Moon Mission retweeted, momentum is building. So people say, hey, look at that. It's taken off. And so they jump onto something, and then the next day they're like, oh no, it happened to me again. You guys have got to stop chasing after these trades. It's almost like a dog chasing a car, right? It's not going to work out. You chase a coin, you book a loss. So what a lot of people get to the point is after they stop crowdsourcing their ideas, they say, well, maybe I should go to the financial media. Maybe I should go to these accepted sources, right? Not CNBC, but accepted sources in crypto to get my trade ideas, right? So here's some recent headlines that I saw. And this was in one of the typical websites. I forget whether this was Sludge Feed or Cointelegraph, but it's like, here's one. Hey, Grin, price takes off, surges 217% over the weekend. So this came out over the weekend, and here's the price, and you can see it clearly screaming higher, right? So there it goes. And so somebody's going to read this, and the problem is with crypto is it never shuts down. That's a blessing and a curse, right? Never shuts down. So even over the weekend, you can spend your hard-earned coins on something like this. So you can jump onto your broker and buy some Grin. Well, the problem is by the time this hits the tape, there's the fade. So here's when the article was published. There's the fade. As soon as the article is published, people jump on this thing and play whack-a-mole and drive it back down. So a quick drop of 35% as soon as the media tells everybody to get long. Not fun. What about this guy? What about Tom Lee? What do you guys think of when you think of the name Tom Lee? Everybody thinks of Tom Lee as well. That guy knows what he's talking about. Look at this guy's resume. Nobody can hold a candle to Tom Lee's resume. He's been in Wall Street for 25 years, chief equity strategist for 7 years at JP Morgan, managing director at Salomon Smith Barney. Good grief. So Tom Lee is telling everybody, hey, I think Bitcoin 15,000 by the end of the year. You got to understand, this was in November when he made this. So you're going to look at this and you're going to say, well, I've only been in crypto for maybe X months or something like that. You're going to look at Tom Lee and you say, well, boy, I should be going long. This guy's been on Wall Street for 25 years. It's difficult not to be influenced by an opinion from somebody like this. Okay, if you guys are just joining us, welcome aboard. Again, my name is Doc with Ready Set Crypto. We're going to be going over the 4 powerful rules. Right now, I'm kind of reminding everybody sort of this progression that everybody learns how to trade with. And first of all, we start by crowdsourcing our ideas through social media. That doesn't work. And now what I'm posing is that getting your ideas from financial media, because it's supposedly further up the food chain than social media, it's not going to work for you either. Even like this. So the CEO of Binance posts stuff like this, like, hey, crypto's going to the moon. So here you go. This guy's the CEO of the largest exchange in the world thinking that crypto's going to the moon, and you're going to argue with him? Of course not. You're going to buy right into there, but these kind of things are just going to happen. You have to be able to sort through this and think independently from it. So headlines in print and visuals on video and TV are extremely powerful. Most of you don't realize that most of your education when it comes to investing has been accomplished through television commercials or print ads, things like that. There are all these broker commercials like, hey, this broker gives me all the research so that I'm an informed investor. We have these things programmed into us by all these commercials that we watch, or at least here in the States we do, right? So it just doesn't work that way. So following the crowd will burn you nearly every time. So for most people, this gets old in a hurry, right? So everybody has to kind of pass through this gauntlet of bad advice and following the crowd until you learn, like, well, maybe I should learn to think for myself. And that's where the switch gets flipped. This is where you can start to actually get some edge as an investor. So the investors that learn to be self-guided eventually gravitate towards technical analysis and charts. And really in crypto, we have no other choice. So we can't really trade statistically yet because we don't have a great set of derivatives like options and all of that wonderful statistic information that comes with that, such as implied volatility and expected move and things like that. We don't have that really with crypto yet. Now that's coming soon. With the volume, we'll be able to get the advantages of statistical information like that, but we don't really have them right now unless you go on to Deribit. So we don't have the trading pits either. So we can't do price discovery by looking into the eyes of the person that we're buying. So we have to do it through charts. That is how it's done. Got to do it that way, as if most people think that there is anywhere else to do that, right? So everything is switching towards price discovery electronically. So many of you here have already made this flip. You've already gotten into this. You get it. You're just looking for a better way to do that. So now I'm going to quit talking about the past and about how we shouldn't do things, and I'm going to start talking about how we should do things. The problem is that this skill is not taught in grade school, right? Can you imagine that if you were taught this back in grade school? Kids, today we're going to go over ancient history and we're going to go over moving averages. Wouldn't that be great if I were to get that in 3rd grade? Think about it. I think we should actually. So the problem is that so many of these experts try to adapt their stock or Forex systems to the crypto market. So there's plenty of people with experience that have already traded in other markets. They get into crypto and they say, well, let's just do the same thing here. Doesn't work. Doesn't work. Hello. So here's the Dow Jones. The annualized current realized volatility or historical volatility is plus minus 18%. And that's actually a little bit elevated recently because of this bottoming pattern here. But when you compare that versus crypto, crypto is plus minus 44%. So there's an equal chance of it being plus or minus within one standard deviation. It's either going to be plus or minus 44% from where the price is now within a year, somewhere in that range. Big difference. So these are different markets, different volatility, different price character. Investors that are used to charting some other market are finding it a challenge to chart crypto because they're not doing it right, right? So when we can't get a grip on the chart, the usual solution is to add more. And see if this sounds familiar. I run into this all the time. So people start out with a simple price chart and they go, well, okay, so black candles means the price is going down and white candles means the price is going up. All right, well, that's not really telling me anything. So what I'm going to do is I'm going to add some moving averages here. So the 50 and the 200, we'll add the golden cross and the death cross to this. Moving averages will give us a sense of trend. Fantastic. Okay, but that's not good enough, is it? So we've got to have the MACD, which is the moving average convergence divergence indicator with not only two line, but also the histogram. But that's not good enough. So we need to add an oscillator. So let's add the slow stochastics for actual tradable signals. But guess what? That's not good enough because there's other ones out there. I mean, have you guys actually looked at how many studies are out there on TradingView? Close to 100, right? So let's add the Bollinger Bands. The Bollinger Bands look cool, right? They show you statistical deviation from a moving average. Now, that's not good enough though, because no system is complete unless you've got the RSI on here, the Relative Strength Index by Wells Wilder. But that's not good enough because I heard about this other indicator called the Arun oscillator the other day, and that looks really cool. So let's add that too. And let's not forget about the Keltner channels, which can go inside the Bollinger Bands. And when the Bollinger Bands trade inside the Keltner channels, you have what's called a squeeze. Okay, so what we've done now is we've completely obscured everything to do with, and let me add my little drawing tool on here if you don't mind. We'll get this going here. And what we've done is we've obscured everything to do with the actual price. We've relegated it to this little range that's up here, and we've squashed it up from there. So that's not good. The price gave us all the information to begin with. We just didn't know how to use it. And of course, we can also add the ADX, which is the DMI, which is the plus and minus DI plus line. So what we've done, again, we've completely squished the price up. And we've tried to add all these trading indicators to this, none of which are going to agree 100%. And we've created ourselves analysis paralysis. I'm sure a lot of guys have done that before, right? I think everybody goes through that phase. So adding more indicators does not provide more clarity, guys. Adding more indicators does not provide more clarity. It usually does the opposite effect. So what we need to do is to fix that. You've twisted yourself into a pretzel with indecision. Hola, how we doing out there? So let's get rid of the crap. Let's go old school and let's do our analysis the right way. So what about using price? What about using price? Okay, so it's never lagging. Price never lags. It's not a trailing indicator. It's not based on some derivative study written 50 years ago by some dude you've never heard of. Indicators do lie all the time. Now, when I say that they lie, what I mean is that they provide false signals. Price will never lie. That's price discovery is instantaneous. It shows exactly what's going on at any given time. Price is the ultimate arbiter of value. Instantly, everything has been discounted into that coin or that token to the second. Everything that's known about it right now is in there, is in that coin, and it trades 24/7. So price reflects everything that's currently known about it to this very second. So I know what you guys are saying. I've heard but it's really hard to learn. So people start off by learning about candlesticks and bars, white candlestick up, open, high, low, close, all that stuff, black candlestick down. But then they look at it and they're kind of like, it's kind of like reading a map for the first time and they don't get it. And people don't like reading price because they haven't been taught the right way. So a lot of people say it's really hard to learn how to read price, but I disagree if you do it right the first time. So you can either keep doing the same thing and hope for different results, or you can learn it the right way. Don't make excuses because the market doesn't care. How about we start learning the right way right now? So enough of the old. From this point forward in the presentation, I'm going to show you the 4 powerful rules going forward. And they're going to be really simple. And of course, you'll get a replay to this. You can just watch the same YouTube video again. I'm going to go through these fairly quickly, so you may not get it the first time around, but feel free to go back and watch the video again. Your mindset will fight you. It'll say, well, this is too easy. You can't do that. But trading is actually a very simple activity. We tend to make it difficult on ourselves. We don't believe that it can be easy, so we fight it. So if you have the right mindset, you can start to apply these rules tomorrow. Start making a huge difference in your trading. Start believing in what you're doing. Okay, rule number 1, here we go. Larger time frames dominate the overall trend. Now, what you'll also find is that what I do is I try to line up everything that I talk about with some kind of activity that you're used to. Because what I feel is that you already know a lot about trading and about charting. Right now, you already know about it because you're alive and you live through naturally occurring things. And what you'll find is that markets are just another naturally occurring thing that moves in the same way that everything else is. Think of a market as an organism. So larger time frames dominate the overall trend. What do I mean by this? So I see everybody getting caught up in this minute by minute movement of the markets. So they're living and dying with each candle. Oh, it's a white candle. Oh, no, it's a black candle, you know, and they're losing perspective. They're losing the context of what's going on. They have no perspective since they're not following the larger time frame swings and trends. They're much more powerful than the individual hourly or daily candles. The same way ocean current is stronger than the individual waves. You don't even see the ocean current, do you? If you're floating around out there, or if you're playing around just off the beach, all of a sudden you're getting pulled down the beach by the riptide, and you don't know why. All you see is the waves. You don't see the riptide pulling you down. So there we are. This is a larger time frame weekly trend heading to the downside. It's no wonder. It's kind of like a weather system, right? It's a larger time frame weather, or larger pattern of weather system will affect microclimates. So now I'm going to pull out one of my analogies here, and the best one I can think of is walking your dog. So who sets the direction of the walk with the dog? So now I'm going to represent this as a typical guy. I'm going to go from point A to point B, and this is the way that I shop. If I'm going in the hardware store, I don't browse. I go in the hardware store. I know exactly where that nut or bolt is on aisle 5, and I go in there, buy the damn thing, and get out of there, right? So this is typically how I'm moving, is going from point A to point B. And the same thing, we guys are kind of mission oriented, right? My job is to walk the dog from point A to point B. That's what we do. So the dog doesn't know about your mission. The dog doesn't necessarily care. So you're walking along the path here from point A to point B. The dog is going all over the place here, constrained by the leash. And this is called reverting to the mean. What you'll notice is that it's not going to go back here to point A without you unless the leash breaks, right? So it's always going to be constrained by that leash, but it will arrive at the same point. It will arrive at the same destination as you. And if you think about this, this is how smaller time frames work within the context of a trend. Larger time frames set the main direction. That's you. You're 10 times the mass of the dog. You're going to control the direction of the dog, but it doesn't mean that the dog can't walk around and sniff here, smell there, mark his territory over here, right? This is what happens when markets pull back. So you see shorter term pullbacks. Here's pullback against the trend, pullback against the trend. You already know how this works, but you never knew the concept behind it. Larger time frames dominate the trend. This is rule number 1. So how do you apply rule number 1? Understand what larger time frames to add to your signal chart. Your signal chart is what you're actually taking the trade off of. That's the signal chart. This is called the anchor chart. An anchor chart is there to give you the context of which direction to trade in. Many people have never heard of this. Here you go. So understand how to read the trend and direction of your anchor chart and just trade in that direction. I know I make it sound simple. Applying this is going to take you a little bit of work. So I want you to think about this, and I want you to write this on your forehead or on a piece of paper on your desk or whatever it takes. Trade in the direction of the anchor chart swing. Trade in the direction of the anchor chart swing. So if you have an anchor chart which is doing this, trade in the direction of the swing. And also trade in the direction of the trend if you can. The trend is going to the upside. But if you can just limit yourself to trading in the direction of the anchor chart swing, you will incredibly assist. That doesn't sound right. You'll help yourself quite a bit to get much more accurate in terms of your trade entries, and things will just sort of magically work out for you because you're trading in the direction of the anchor chart swing. So write this somewhere, write this on your desk, write this on your arm, tattoo it, trade in the direction of the anchor chart swing. Larger time frames dominate the overall trend. That is rule number 1. Simple, right? It's simple, but nobody uses this. There we go. Let's go to rule number 2. Rule number 2 is the opposite of that. Reversals come from the inside out and they propagate higher in time frame. What does that mean? All right, get to that. So we never see reversals on the signal chart if we're just watching the anchor chart. It's like, think about an aircraft carrier steaming at flank speed in the Pacific Ocean, going about 35 knots, and all of a sudden, somebody drops overboard. Oops, man overboard. What they have to do is called a Williamson turn. They have to literally drop that thing on its keel and swing around. It takes about a mile to do that. Markets don't instantly reverse like that, especially at anchor chart timeframes. Like a weekly or a monthly chart takes forever to reverse those things. But they start from the inside out. They start from that signal chart or maybe even something smaller than that. So analogy time again. I had to Google this because I'm not a biologist, but one virus can infect you. And the way it works is that it hits a single host cell and then it begins to multiply inside of that host cell. And that's where the other viruses find other host cells and the whole thing just multiplies, right? It goes exponential. That's when it swamps your immune system. I hope nobody is sick on board here today. Think about this in terms of the market context. The trend reversal starts from the smallest time frames and starts to propagate higher. So something that reverses at the 1 hour time frame will eventually propagate over to maybe a 5 hour chart. And that 5 hour chart eventually will propagate over to a daily chart, right? So it comes like propagation. So here's an example of a short-term reversal of a downtrend. This is a downtrend in play here until it reverses with a higher high and a higher low. This is what we're looking for. So the short-term hourly chart, now the point with that one is it took you several days to figure out that this is actually reversing. But if you go down to an hourly chart, that reversal, you can see it much faster. Much faster. So that's the whole point here, is understanding how to use the smaller time frame charts to spot those reversals. That's the holy grail of trading, right? Reversals. That's where the biggest edge is found. That's where your best reward to risk is always going to be. So change always happens from the inside out. Change always happens from the inside out. So you can get sick from one virus. One severed column in a foundation can bring down a whole building. You drive the same car every day and you don't notice things wearing and degrading until somebody else drives it. Have you ever noticed that? You drive a car every day and then somebody else gets in and drives it and say, "What are you doing? Your brakes are terrible." I never noticed, because you just get used to it. You never notice those small little changes. Those are happening under the hood. So change is often small and imperceptible if your focus is too broad. So think about this. Those smaller time frames can be our early warning to possible failure or reversals in case we're about to reverse. So how do we apply rule number 2? Understand what smaller time frames to add to your signal chart to help spot changes in trend faster. So let's go back to analogy time again. Let's think about the dog. Here's you, right? So let's think about if the dog, maybe the dog is going to pull you back home. Maybe this is your direction. You're going to go to point B and then you're going to go back home again. What'll typically happen is, here's the dog. Dog is going to be going like this. This is the smaller time frame working inside that anchor chart swing, and all of a sudden, what happens? A lower high, lower low. The dog starts moving back in this direction, right? I don't want to, you can't do this with charts, right? You can't go backwards on the charts. Time doesn't go reverse, but you get my point here. So understand how to read the trend and direction of the smaller time frame chart. Trade in the direction of the anchor chart swing until you see the signal chart reversing. Okay? That's not going to you're not going to hit that until maybe tomorrow. You'll put that together tomorrow and say, "Oh, I know what he's talking about now." Reversals come from the inside out and they propagate higher in time frame. That's rule number 2. You can set these up on TradingView. Actually, TradingView's got a feature where you can set up multiple panes on here. I typically will set up 2 to 3 time frames depending on what I'm trading. And they usually go in a factor of 5. So weekly down to daily, down to a 5-hour chart, it's approximately a factor of 5 between them. I find that this gives me the swings within the swings. Okay, we are at rule number 3. How's everybody doing out there? We're right on time. Descending patterns break to the upside and vice versa. You guys are going to love this one. You won't believe that this has been happening in front of your face the entire time and you didn't know this. So this one's pretty simple. So what goes up must come down, and vice versa. So here here's an uptrend. An ascending pattern will always break to the downside. That turns into a descending pattern. A descending pattern will always break to the upside. And that turns into an ascending pattern. An ascending pattern will always break to the downside eventually. What goes up must come down. This is rule number 3. A descending pattern eventually will break to the upside. Now, a lot of times what I'll see is there's a little twist to this. So I'll see something like this. I'll see an ascending pattern like this. And then it slows down, and then all of a sudden it'll go like this. A lot of times I'll see what is an S-shaped curve like this, and you can actually flip this around to the downside. A lot of this is because they're at the very end of a bull run. Typically you'll get this sort of parabolic, what I call a tail. This is when the final shorts are getting chased out. This is when the people that have been sitting on the sideline the entire time, just sitting there in agony, can no longer take it anymore, and they chase after the market. So the final parabolic tail occurs. This typically will break eventually from there. It'll collapse in a heap to the downside from there. Same thing happens with a downtrend, is you get typically a waterfall decline capitulation forming the end of that downtrend before. So you typically get, exhaustive behavior like this. Okay, onward. How do we apply rule number 3? This works on every time frame, but obviously you'll see more instances of this on smaller time frames like intraday, right? So it certainly is open to interpretation. I get a lot of questions from people saying, all right, now are you using the candlestick bodies or using the wicks? And I will say I'll take anything that I'll touch as many times as possible. So it's open to interpretation, but this is the art that comes with the science of trading. Eventually, there's going to be a no-doubter break. Eventually, there'll be a no-doubter break, usually after it goes parabolic, and the cycle will continue. Just remember that. Write this one down. Ascending patterns break to the downside. They have to, eventually, right? They have to eventually. Descending patterns break to the upside. You can see this on any time frame, any chart. I don't care what it is. It always works. And now we get to rule number 4. Now we get a little bit more tricky, but we're still going to stay with science and things that you guys already know. Range contraction leads to range expansion. Range expansion leads to range contraction, and repeat that forever. Now, if you learned how to trade from one of these typical mass marketing programs that said, well, you got to have a MACD, you got to have an RSI, here's your moving averages, buy the dip to the moving average, been there, done that, right? Buy the green arrows, sell the red arrows, that you got sold on this concept of overbought and oversold. I have never seen that work since the days of choppy markets. Markets, especially with quantitative easing, especially with crazy markets like crypto, there is no concept of overbought and oversold. Doesn't work anymore. So markets just don't move like that. Markets run as far as they can until they hit exhaustion. And I'll show you what that means in a minute. So markets run as far as they can, they hit exhaustion, and then they consolidate. And you can think of this as kinetic energy is exhausted, it gets turned into potential energy. This is almost like winding a spring up again, winding it up tighter and tighter and tighter until eventually flies out of your hands, right? Potential energy gets turned into kinetic energy. You guys remember that from Physics 101. If you are going to run up the side of a mountain, I don't know of anybody that could just run up, maybe except for Alex Honnold, but I don't know of anybody that could run up the side of a mountain and summit in one day, just continually just keep chugging away, run until they hit the summit. It doesn't work that way. Eventually, at some point, you hit the point where you're in exhaustion, you're holding your gut, right? You got a stitch in your side, you're bent over double, you're drinking water, you're just like, oh, just give me a minute. And you recharge after 5 minutes, and then off you go again. This is how we move. This is how we move. It's almost like rush hour traffic, right? So Mount Everest is a good analogy for this. You go as far as you can up to the first base camp, and you acclimate. You restore yourself. You rest for a while. And then once you're recharged, you go to camp 2, right? So this is how markets move. They break out, they consolidate. Break out, they consolidate. Break out, then they consolidate. This is how they move. Actually, a pullback is a different form of this. There's also markets that go like this. They pull back, and then they move up. They pull back. A pullback is actually just a faster form of consolidation. So this is the way that nature moves and the way that markets move as well, too. Okay, so we can use what's called the choppiness index here. The choppiness index is a default function that comes with TradingView. There it is. It's right there. You'll find it in the chop index. And I want you to look at this with a different eye. When you see a high value of the chop index, this is indicating a trendless market. A trendless market is one that there's no linearity to the trend. And what that will be factored on, the choppiness index will have very high value. And so we can see this when we look at the actual price with a cluster here. Look at the candles have been going nowhere for like X number of days here, just nothing. No trend whatsoever, very high energy level. Range contraction leads to range expansion. Boom, there she goes. Here we go again. High level of energy, range contraction. The price is not doing anything. It's just going sideways here. Building up energy, winding up that spring. Boom, up she goes. Range contraction, price going nowhere. Sideways, building up a lot of energy. Boom, up she goes. Right? This can go in either direction too. All right, so let's take the converse of this. What about exhaustion? Range expansion leads to exhaustion and range contraction, where it builds up energy again. And you'll see this over and over again. Range expansion leads to exhaustion and it builds up energy again. It's got to wind up the spring again before it can move. Range expansion leads to exhaustion, which leads to that range contraction that we talked about. So it's just over and over again. There's no overbought, there's no oversold. I'm sure it exists, but I don't see any edge from it. What is overbought can become more overbought, forever, in perpetuity if it wants to. But I see this every day in every time frame, again and again and again. Range contraction leads to range expansion. Range expansion goes to exhaustion and then leads to range contraction again. Over and over again. There we go. So using these principles will give us an early warning when a consolidating price chart is about to break out. I love this signal. This is great in an uptrend, right? You see a breakout, you see consolidation. The tighter, the better. The tighter that spring is being wound up, the better. Breakout, off she goes again to the next. And it's just again and again. You guys will see these now. You'll start to see these on charts all over the place. If anything's breaking, there's a select set of coins that are actually breaking higher from time to time. You have to catch them quick. Okay, we're just about on time here. Now the converse warning when a trending price chart is about to stall out. So if you get something that's going like this, you got a pretty good idea of where it's going to stall out and where you might want to take profits. And this is what I love when I trade options, because I will trade into the exhaustion for something to consolidate like in there. So we'll get to that probably next year. I hope options will come to crypto. So how do we apply rule number 4? Works on every time frame. The larger the time frame, the more powerful the signal. So if you imagine, and I'll show you this in just a minute here, like a weekly chart that goes into exhaustion, you're going to have that thing consolidating for weeks. There you go, right? So a larger time frame signal is going to be more powerful. So there we go. Weekly exhaustion signal, weeks of exhaustion. Conversely, a weekly charge signal might tell us to expect a major break in price. The larger time frame the signal, the bigger the move, or the longer the consolidation. So I use the CHOP index linearity of the current trend to determine exhaustion and charge levels. It's right there in TradingView. You don't have to buy anything. It's right there. Range expansion leads to range contraction and vice versa. Okay, so that's number 4. So I put together a quick example for today. Let's see how we can tie all the 4 rules together with Bitcoin. So here is the Bitcoin USD weekly chart from today. And what do we see here? Rule number 1, larger time frames dominate the trend. So what's the trend right now? It's to the downside, isn't it? Right? Rule number 4, range expansion leads to range contraction. So what do we have down here? Whoa, okay, there we go. So let's go with the pink here. In November, we had a pretty hefty range expansion to the downside. Everybody was sad with that, but you got to get on the right side of the price, right? So from a big energy level, big surprise here, big energy level, we got a big movement, didn't we? But how is it right now? It's at exhaustion right now. So what are we seeing? What are we seeing here on the price? Well, this gives us the overall context that price is generally trending down, but it's at exhaustion. So this should provide us with weeks of sideways choppy price movement. What has the price been doing for the last few weeks? Up and down and up and down, just kind of drifting around. It's doing exactly what it's supposed to be doing. Understanding this, understanding the 4 rules would let you understand what's going on instead of trying to read in all of Cointelegraph and is Bitcoin going up or down? And waiting for Tom Lee to prognosticate as far as which way it's going to go. Use the tools that are there. So now that we know the context or the larger forces at work on the price, we can zoom in and look for edge. We can trade within that range, can't we? So if we go down to something like the 5-hour chart, what other rules, what are the other 4 rules that we can use here? Well, rule number 1, trade in the direction of the anchor chart swing, so we could still stay short if we wanted to. We could look for short trade opportunities, or maybe depending on how we define the anchor chart, we could actually look for longs. There's also rule number 3 setting up here. Doesn't rising patterns, don't they break to the downside? There's rule number 3. So you can see how you can apply all these 4 rules in various different ways. They're very simple. It takes a little practice for you to spot them and understand how to play them. But now all of a sudden, instead of seeing a chart with just a bunch of random candlesticks hanging around and not knowing what the hell's going on between day to day to day, and then again, going off to Cointelegraph saying, please tell me where Bitcoin's going to be tomorrow, or maybe Twitter. All of a sudden now you've got a full set of tools that tells you what's going on under the hood of the market. And you can start to look for reversals. You'll know what it will take for the price to reverse. We can even go down to the 1-hour chart as well as the daily chart here. So this combination of 25 to 1 or 24 to 1 in this case. Rule number 2, reversals start from the smallest time frames. So look at this. This is kind of cool. So here we go. We see a green candle on the daily chart today. I think it's still green. And here's what's happening. Here's the reversal. Here's the downtrend on the 1-hour chart. And all of a sudden what happens is, so far that's a lower high, but here's a higher low, higher high. There's your reversal right there. There's your first indication of a reversal, higher low, higher high. You can trade this type of stuff, especially if you have the right instruments to do so. So I see these 4 rules at play every day, every time frame, every market that I trade. They're reliable because they're based on price. It's not some funky study that's out there that nobody's going to tell you, oh, it's a black box. Stay away from that stuff, guys. So a quick recap. We looked at how crypto traders usually start making decisions, mostly with bad information. We're using crowd sourcing our decisions, and that usually people will gravitate towards charts as price discovery is easier to read visually. Crypto is more intense, though, than any other financial market, and you can't just use some old strategy that doesn't offer any edge. So we saw that of the 4 rules, we saw that larger time frames dominated the trend. That's rule number 1. Rule number 2 is reversals start from the smallest time frames or from the inside, and then they propagate higher. Rising patterns eventually broke to the downside, and vice versa. That's rule number 3. Range contraction was like a spring winding up, adding potential energy, releasing as kinetic into range expansion. Range expansion or trending would occur until exhaustion, at which point the price would move to range contraction. It just goes back and forth, back and forth, back and forth all the time, right? Remember the first 5K race that you ran. You ran for a while, then you walked for a while. You ran for a while, then you walked for a while. At least that's the way I did it, right? Okay, so these 4 rules, while they might seem simple, took me about 2 decades of my life to fully accept and internalize and make them simple, because it just seemed to be too complex before that. Sometimes it takes a long time to make something simple. So I'm sharing with them with you today with the hope that they can make a difference for you if you apply them properly. I'm convinced that if you just take these rules and start using them, that they can make a huge difference for you. However, there's going to be folks that say, yeah, well, that's great, but I don't know when, they're looking for the detail behind things. They're looking for the structure. So for those that want it, I do have more to offer for those ready for it, which is the Ready, Set, Crypto Fractal Energy Trading Masterclass. And we've had this out now for a couple of months, and it's been very well received. People love it. So the masterclass, I am the instructor for this. There's well over 5 hours of video content. There's probably more than that. There's 15 videos that are in there, and each one of them is at least 20 minutes long. So right now, if you go out to the website, it's $149. It's on sale for $99 tonight. Or for those that are premium members, that's $89 if you use a coupon. Discount disappears over the weekend. Class will cost $149 starting Monday if you don't go to the link that I'm going to send you guys here. Now, what I've also done is we've created a group coaching session for this. So people like to work in a group setting, and for just a little bit more, you can have that much more application to be able to ask me questions in a live setting. So this is an add-on to the class. You cannot buy this separately. So we're going to do 4 sessions live. They're at least an hour, and most of them lasted at least 90 minutes the last time I ran this. So usually we have very limited attendance, so there's lots of personal attention if you have questions. Again, the discount disappears this weekend. I'm trying to start a new class, and I want you guys to join me here. So we'll start the sessions in early February. Alumni, this is the cool part here, is that alumni, the ones that attended this back in October, get to attend this for free again. So you at some point will be an alumni. I'll give this masterclass again at some point, and you can attend for free as well too. Okay, so this, again, this 15 module course plus 4 private group coaching sessions for $178 or $168 with a coupon tonight disappears this weekend. You must act. So the dedicated serious investor will choose this package. Okay, I'll get to your questions in just a second here. So here's what we are going to cover with the masterclass. This is what we will do. How to read price trends on single time frames. How to read multiple time frame trends. That's not as easy as it sounds, right? You got more than one thing going on at once. Remember the first time you learned to drive, a lot of things happening at the same time. How do you handle multiple time frames? How do you combine rules 1 and 2? Larger time frames dominate and reversals come from within. Understanding how to fit the puzzle pieces together is very important here. Number 4, how to determine entries on a chart using nothing but price. Imagine that, just trading on price alone. Number 5, understanding how price moves between range expansion and range contraction, evaluating energies on single and multiple time frames, and putting everything together with price and energy on multiple time frames, which is what I call fractal energy trading. Now, I go above and beyond just the analysis of this. We go into risk management and directional trading signals, market states and scanning for opportunities. And then finally, the capstone for this is understanding how to make this yours. How do you journal your trades? How do you learn from things that you've done with your trades? How can you understand your performance and be able to improve that? Okay. So I believe it's your complete toolkit to be able to analyze any market and any time frame. It is what I believe is the only market analysis you'll ever need for any of the trading that you're going to do. It works for equity markets, Forex markets, crypto, anything, futures markets, anything that you want to do with this. Now, what I'm going to do is I'm going to bring down the actual course page for this. So this is the actual course page. This is what it looks like, the crypto fractal masterclass here. And you can see that for every module, there is an associated PDF. So there's an actual ebook out there for every module that you have. So you can get, some people are better, learning from watching things. Some people are better for reading. There's also a module quiz. So you can, those are those that like to get their hands dirty with things. You can take the quiz and understand whether or not you can get through this. So everything is out there. Everything is built. Everything is ready. The last time I gave this class, I was just running just a couple steps ahead of the class, but now we have all 15 that are out there done, available for you to trade tonight. Okay. So let's see where my presentation here is. Give me a second here. I got to find this. Okay, so again, I think it's your complete toolkit to get started with everything. We looked at that before. This is what the optional coaching sessions look like. So if you sign up for the optional coaching sessions, you'll have access to the previous ones right off the bat. as you wait for us to spin up the live session. So you get access to more information that you can possibly get through in 1 week. Again, here's the link that you need to use. The link that you need to use for this is right here. So it's, let's use a different color. It is readysetcrypto.com/fractal. So that is the class itself. Again, if you go out to our shop, our store tonight, you're going to see it for a different price. You don't want to do that. Here is readysetcrypto.com/plus. This is the Fractal Energy Masterclass plus the coaching. And again, only at that link, only at that link. If you go out to the store, you will not even find this. Okay, so here are the links. I thank you for your patience. We're coming in right on time here tonight, and I would be happy to take any questions that you have at this point. Okay, so one of the things that I will say is that technical analysis is not prediction of the price. This is not fortune telling. If you're doing technical analysis right, you're setting up an analysis, you're framing in the price action, you're saying, I don't know what's going to happen tomorrow. Nobody does. I don't care who it is, nobody knows what's going to happen tomorrow. So what you're doing is you're framing in a decision point. What you can determine is what you will do, like if the price breaks higher or the price breaks lower from a range. So it's all about telling yourself what you will do. It's not about predicting what will happen tomorrow. It's a very important point. It's a great question. Well, the course is going to be around forever, but I just don't want you guys to have to pay more for it. I'd like to get the class started next week. This is why we're discounting it right now. And that's why we like to get people in. Okay, so James is saying, not sure you can accurately use fractals in crypto. Show where you use this to make gains with a low volume and bot trading in crypto. That has nothing to do with it. Price action is out there regardless. Price action doesn't change with the volume. Crypto is too volatile to use with this method. Show the proof. I disagree. I disagree. Are the master classes recorded or live stream only? No, they are all pre-recorded. So the coaching sessions are, of course, live, but they're recorded. But all the other material is pre-built. You have to pay every month? No, this is a single fee. It's a one-time fee. Okay, looking for any other questions here? I think the amount of information that you get for what you're paying for here is huge. I mean, you're getting a program here that you can use for any market, any time frame. So whether or not you're more of an investor or holder, you can expand your time frames. If you're more of a day trader, this works for the same thing. Anything that I trade, whether it's stocks, options, futures, crypto, it doesn't matter. You can use the same system for this. You're just adjusting the time frames. You're just adjusting the hold times and the signals for what you're looking to do. You don't have to learn different strategies for different things. Okay, so let's see. Betahi. Hi, Doc. Would you say that trend trading is harder than swing trading in the sense that the former requires both chart reading and trend reading, but the latter requires only chart reading? Well, everything is trend trading. I think, look, if you're just an investor, the easiest thing in the world is to be just a buy and hold investor. But you have to have the patience and right? You have to have the patience and durability and endurance for this to be able to withstand all the dips and those kind of things. So it's not a technical form of trading. If you're getting into actual swing trading or scalping, that's what's really available today. The market is moving just enough to be able to offer scalps within the movement of the larger time frames. So depending on how far you want to dial down what you're doing, the other thing too is that we're seeing a lot of derivatives that are coming out. A lot of futures contracts are coming out. There's a brand new vendor that's coming out on Monday as well. There's Digitex in the wings. There's all kinds of great solutions that are coming to bear for this, for dealing with the volatility, dealing with the actual movement. So there's a whole different ball game between investing and holding something versus swing trading or scalping, depending on what your time frame is there. But you've got to be much more accurate if you're swing trading or scalping. Okay, so again, the two options that you can go through, you can just get the class for $99 or $89 if you're a member using the coupon. Or if you want to go for the full ball of wax here, you get the class and the 4 live coaching sessions, as well as becoming an alumni. You can include yourself on future sessions as well too. That's $178. Again, we're going to hold those prices until this weekend. After the weekend, we shut down the class and we say, see you next time, right? So I'm trying to get people into the class. All right, couple more questions and then I will let you guys go for the night. All right, let's see if there's anything else here. Yeah, Mohammed, if that's a problem, let me know. Send me an email, support@readysetcrypto.com. I'll make sure that you get in at the right price. Okay, so LotusWorks has a question here. If anchor chart time frame is exhausted, but signal time frame is charged, does that mean that we can accept some small movement within the signal, but will not change anything? Well, so what this means is that if you have an anchor chart in exhaustion, so let's say in this case, anchor chart in exhaustion, and you've got, what that means is that more than likely the anchor chart will probably go into some form of consolidation. So that means that you can still get some small swings within there, but you're going to be dealing with, there's not a whole lot of edge in that. Yeah, I agree with what William is saying. The spread is too high at most brokers. So you have to pick, if you have smaller swings, you got to be careful of what you're paying for this. So it's not just the best broker. I mean, I don't have any problems with Binance or Bittrex or any of those, but it's more about what you're actually trading. Do I use the 50-week moving averages at all? No, not really. Not really. There's too many people putting too much weight into things like, oh, the 200-week moving average is the most important moving average ever, things like that. No, it's all about price. Price rules everything. You cannot go wrong if you fix on price. What's the difference between fractal analysis and technical analysis? Okay, so fractals are the relationships between the large and the small. A fractal relationship is, what this means is that bigger things like this are made up of a lot of smaller identical things like this. And that's why we use the factor of 5 between them. Technical analysis just refers to, it's just the whole study of price action, it's moving averages, it's all the other trailing studies that are out there as well too. All right, guys, thanks again for hanging out with me. Make sure you join me in the class as soon as possible. I'll look forward to seeing you out there. And as always, you guys have a good night, and I will see you guys again soon. Thanks again for hanging out with me. We'll see you guys.